Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. Today's stock analysis report is about what I believe to be the most valuable upgraded company of the day. This one comes out of the semiconductor space and is a major part of the semiconductor ecosystem. I'm talking about Applied Materials. That's ticker symbol AMAT. Today, they were upgraded by Barclays on the back of higher chip equipment spending. Applied Materials is projected to nearly double their earnings per share over the next 5 years with a compound annual growth rate of 14.7%. That growth rate is nearly twice that of the semiconductor equipment manufacturing industry, which is projected to grow at a rate of closer to 7.7% and hit a valuation of $220 billion by 2023. Applied Materials is at the top of the list of key companies in the industry and are projected to outperform. Although they're most known for semiconductor equipment and other semiconductor technologies, they also provide equipment for the production of flat panel displays used in TVs, laptops, and solar panels. Recent shifts in tech put them in a great position to continue to deliver returns to investors. Applied Materials has had strong sales growth of over 10.7% over the past 5 years with a free cash flow margin of 25.7%. The company is extremely liquid with a net cash positive balance sheet, which means the company has more cash on their balance sheet than debt. This should further allow them to compete over the long term. Applied Materials has a return on invested capital of over 28.4%, which suggests that the company has done an amazing job at generating returns for its investors. The long-term total return of 469% over the past 5 years is more than 4 times that of the S&P 500 over the same period. The stock is currently up following the upgrade from Barclays, but investors should be careful not to chase the stock at these levels. My average target for Applied Materials is $211 per share, but I believe fair value sits closer to $180 per share, which suggests a potential downside of 15% from where they are today. Overall, Applied Materials was graded a perfect score by the Equity Channel Index, checking off all boxes during our fundamental analysis. The only holdback here is that we may be paying too much for growth. The company's operating earnings yield of 3.9% beats 53% of the 4,000 stocks covered by Ford Equity Research, which suggests that they're just middle of the pack when it comes down to their core valuations. My intention is definitely to pick up some shares on the next pullback. Investors without a current position should buy below $211 per share, and those with a position would do better for themselves, waiting for fair value below $180. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.